please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, so I was just trying to understand how you are sort of tweaking, if at all, your own stance. If old valuations are not going to come back after this reality check, then sort of will you stay away from housing finance companies? Would you only look at consumer finance? How are you now sifting through some of the NBFC holdings that you have?
Surabhi, thankfully we were underweight on NBFCs. We didn't have many NBFCs in the portfolio, and the ones that we have in our portfolio are very strong franchises. We do not believe that they are going to get affected in any way, even if there is a scare in the market or funding constraints in the market. They are all well capitalized, well funded NBFCs. So to that extent, from a portfolio perspective, I think we are quite insulated from what has been happening in the NBFC segment. But I think given the fact that the petroleum prices have risen so much and there has been a hole in consumer pocket, clearly the consumption was anyways going to take a hit. And given the fact that the lending to finance some of these consumer discretionary spends would also possibly go down over the next few months, there seems to be some bit of caution that is required on the consumer discretionary and the consumption-oriented businesses. And that's where I think we have seen significant volume growth over the last few years. And also we have seen significant stock performance. And that is a segment that we are looking to cut our weightages. Apart from this, I think on NBFCs, we are fine across all our portfolios.
Okay, that's a real
portfolios.
Okay, that's a really interesting juncture. Looking to go slightly perhaps underweight or cut some exposure on consumer.